Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, June the 6th, 2013, and we'll be looking at a couple different charts today. I could show you right now the SPX, the Russell, no, not the Russell, but the NASDAQ, and then, of course, the Dow Jones as well. They're all going to be looking basically the same. The Dow Jones Industrial Average is the strongest one, therefore I'm going to be looking at it. You can, of course, apply this same analysis to the others that I've just mentioned, the S&P and the Russell. I'm sorry, the NASDAQ. The Russell looks a little bit different, so we're not going to count that one. Basically, what you have here, a bullish uptrend in price activity. Okay, this is very important to bulls, right? You have higher highs, higher lows, and that's everybody's happy with that. And you pull back down here, typically you find support at the 50-period moving average in a bullish market, and the best signal you could possibly find is a hammer candlestick, which you have as of today. So this is perfect for bulls. I mean, if bulls wanted a reason to buy, this is their reason. And if you've been to the free website at PerfectStockAlert.com, you know there's a tutorial video series there under the Trade School section that talks about trading this particular candlestick formation, this particular trend, etc., etc. All of that would be perfect. I mean, you couldn't ask for a better signal if you were a bull. And then I can see why a lot of people are going to go out here and buy this. And here's the kicker. You need confirmation the following day in order for that to be confirmed. Basically, you need 1 cent higher than today's high would be a reason to buy. Your stop would be set right here, okay? And then you'd be looking to test this previous high. So if tomorrow was a little bit higher by even a penny, and then they would go buy and would be looking for a test to come up here. And if they take out this level, then my argument is completely shot. My whole theory that we've just peaked and we're seeing the start of a bear market, they would kill that theory right there. And so that's what's happening. Okay, you've got that going on. At the same time, there's another way to view this. If they fail to hold this line, if this line right here breaks down and you get maybe you gap up tomorrow and sell off, something of that nature, and you get below this line, then your bull has just been stopped out of the market, and they now have a problem, and that is that they're closing below that 50-period moving average. And again, the Dow Jones Industrial Average, this is the strongest U.S. chart that we have. It has never closed in this rally time period. It has never closed below that 50-period moving average. This has been very strong. So if you start to see that, you're going to, of course, cause a little bit of panic there, and they're going to recognize at that point, wait a minute, something's changing here. It was working and now it's not, and that's very important. So for the psychology of traders and stuff, so it's very important you watch this. I've drawn the downtrend line right here, but here's the thing that really matters. Whenever you see this move and you look across the global markets, you will not see this hammer candlestick formation anywhere else. It's only specific to the U.S. Why is that? Well, it's very simple. It has to do with the fact that we have our unemployment data due out tomorrow, and that's what the bulls are looking for. There's, oh, this is good. We might get some good news, and that would help us. Actually, it doesn't matter what they say. It'll be bad for you. Here's why you know that. The Fed right now is looking at the market and they're saying, okay, well, we believe we see, slow to moderate growth, they stated. That's what was mentioned in the Bayes book. So they see the market, the economy is doing well enough that they could pull away the punch bowl, stop the QE, right, or at least reduce the QE. That's what they've been signaling to the market. And so if you get unemployment data that is good, and you see a good number, then that would just give more reason for the Fed to pull away the punch bowl, and that would end up driving markets lower. If they get a bad signal, then you get bad news because the economy is getting weaker, and again, that would still be a negative for you. So there's really no way that news is going to help you in this situation. But in any event, you could see another day to the upside kind of thing, but I expect by Monday you'll take this level out here. Once you've taken out this level, as I've mentioned before, the next point that you'll be testing with the previous lows, I've already talked about that. Look at anywhere other global charts, you can see you're heading that direction, or I've already taken out those lows, and that's what the U.S. would be doing in the same time period. Of course, as this starts to break down, you're going to see an increase in the momentum to the downside more than you've already seen, and that's important because that's something you have to do is break the back of the bulls in order to see the bears get stronger. And so this is what's happening right here. This is their last stand, basically. They need to see this held. If they don't do that, you've got a structural change developed here, and that's going to just send a ripple effect across the globe. Really, everyone's going to recognize that the U.S. is pulling back, and then they will do so even that much faster. Okay, I'm going to take a second and try to teach you something based on the Japan chart to show you something that happens in a bearish environment, and it's something that's very important. And if you were to see that tomorrow in the U.S., you would have to take note of it. And then that is that whenever you're in a bullish condition, like I showed you on the U.S. chart, you typically find the support at the 50-period moving average hammer candlestick is a great signal, and you get confirmation, and you go long, so forth and so on. Everybody's happy, and you just make money that way. When that stops happening, it looks like this. You get a hammer candlestick formation, just like that, and then the next day you don't get confirmation. It just breaks down. Just goodbye, and we're gone. And you can see it happened here. This time it took about 2 days before you just turn around and say, no, we're gone. And now it's headed up here again. Now you'll know that in this particular environment here, when we had that signal, I told you I wouldn't be a buyer of that because it wasn't confirmed by the Nikkei. The Japan iShares, the EWJ, it's designed to track that. So if the signal on your iShare chart, your ETF, is not confirming or being confirmed by the underlying security that's supposed to be tracking, then of course you wouldn't be taking it. And looking at today's candlestick with this hammer situation, let's quickly go look at the Nikkei. Okay, here we are looking at the Nikkei, and you're in Nikkei, or however it's pronounced. I'm not Japanese. You can see that actually the signal that we have for today is the exact opposite of what the chart is showing you for the iShares. So of course I wouldn't be a buyer of that scenario at all. You're getting a sell signal underneath this 50-period moving average. That's again a bearish signal here, and that's coming after a bearish engulfing signal that followed the day before. We had these two candlesticks here, one up and then one that engulfs it, another sell signal here. You might even call this a stick sandwich if we're a little bit different, but it's basically the same thing. All this is just showing that you have some massive resistance forming at the, I'm sorry, wrong tool, at the 50-period moving average, and that is, of course, a bearish signal. If you get that, you should be looking at your longer-term chart saying, what's going on? Are we structurally breaking down here? And if you look at the long-term chart, let me quickly do that. Let's see if I can do that right quick. Move this over here and click on that. And you can see that when you look at the Nasdaq, the Nikkei, you can see that all we've done here, we've had a massive rally that's taken, you can measure it out different ways. You basically measure, we had this low point here, come up here to a high point, then you consolidate for a good period of time here, and then you broke out first leg here, duplicated out here, and now you've hit massive resistance. Big old fat sell signal confirmation as of right now. So all of this, of course, doesn't have to close, doesn't matter where it closes, as long as it takes out the previous low, it's confirmed. So at this point in time, a lot of people are going to come in and sell at this point with a stop right here. Overall, I still see a bearish chart, a longer-term chart, which is just continuation of a bearish trend. You've got this lower series of highs, lower series of lows, and the bigger trend is still down. I expect that the Nikkei is not coming anywhere near its actual low point in this pullback. So there's still a lot of downside in the Nikkei. I wouldn't be trying to buy that. Quick glance here at the Australian market, the AORD, same basic overall story. Another one of those signals, again, hammer candlestick formation, not confirmed, just snaps the next day. Again, those are signs, those are things that happen when you're in a bearish market. You will see a setup and then failure, setup and failure. It'll just happen again and again and again. If I show you a Hong Kong Hang Seng Index, you see the exact same thing. There's been a couple other charts that have done the same thing in BSC and so forth and so on. They're all telling you the same thing, that bulls are very, very weak, and so I would expect the same to start to develop on the U.S. chart. So when you go back and look at the Dow Jones, now you can see that it's very important that the bulls don't get taken out below this level. If you do, then you're getting another bear market sign telling you that this thing is falling apart. Okay, and that's what I see for the markets right now. For those of you who'd like to see those tutorial videos on the trade school section here to show you how to trade those hammer candlestick formations or the shooting stars, you know I'm a fan of both. You can watch them right there. They're, I don't know, a couple minutes long, and each one shows you exactly how to trade them, where to set the stops, where to enter, and so forth and so on, okay? As well as where the target is and all that, okay? God bless. Take care. I'll see you in tomorrow's market analysis video. God bless. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.